Welcome to the Ultimate Day Trading Strategies Crash Course Part 2. If you're new to the channel, my name is Shay, aka Humble Trader. Previously, I made this 1 hour long technical analysis crash course on this channel. I'm really happy to receive so many positive feedback from you guys watching. So in today's crash course, I'm gonna be teaching you a frequently used trading strategy, which I call the gap up or gap down trading strategy. Stocks that gap up or down overnight has the best potential to give you the range and volume, essentially creating a runway for the stocks to go a lot higher. In trading, you always want to look for stocks that can potentially give you a larger range to profit from than the risk you take. So having a gap up trading strategy in your trading arsenal is a must. And spoilers, in this crash course, I'm teaching you as many as 5 trading strategies that you can potentially use to trade gap ups or gap downs. You guys know the drill. Take a look down in the video description first. I prepared the important chapters for you, from understanding the psychology behind the setup to practical learning on how to execute the strategy with my live trading examples. So make sure you smash the like button and save this video. Learn at your own pace and share this crash course with someone who might need it. And yes, in this case, I'll be sharing this lesson with my ex-husband, Mike Bagholder. Our first chapter is on understanding what a gap up or gap down mean, and the trading psychology behind gap trading. Now let's dive into it. So, what exactly is a gap up or gap down strategy? A quick 101 for my new traders. A gap up or gap down refers to a situation when the price of a stock opens higher or lower than the previous day's closing price, resulting in a gap in the price chart. These kind of overnight gap may occur due to significant market news, such as earnings reports or economic data. Let's look at an example here on the stock Google on my trading view chart. You can see the prior day's closing price for the stock was around 112 all the way here, and overnight it gapped up all the way to 113 and opened all the way up here at 115. So this is like a $3 per share overnight gap up. The next example over here is a gap down overnight on my favorite stock of all time, Moderna. Anyways, there's negative news on the stock. You can see that's why the stock, prior day's close was 157 over here. Gap down overnight and pre-market, it dropped all the way down to 146. So this is what we call a gap down. And this is like a $10 per share, huge breakdown day on Moderna stock over here. And this will be a great short opportunity that we're gonna go over later on in the strategy video. At this point, you must be wondering, Shay, why is this gap up strategy so effective on large cap stocks? Well, the reason you want to focus on large cap stocks when trading the strategy is because those kind of stocks have 2 key traits. Number 1 is the high trading volume from large cap stocks, and number 2 is the volatility and range. Large cap stocks are generally considered to be more stable and more predictable than the small cap stocks, and they have a higher trading volume compared to small cap or low float micro cap stocks. And when these large cap stocks gap up or gap down, that brings in even more volume and volatility than normal, because they are more likely to be affected by significant news such as quarterly earnings reports or guidance. Chapter 2, Gap Down Long Strategy, Criteria and Live Examples. Okay, I hope I made the concept of gappers simple enough for you to understand. In our next chapter, we'll get started on the first strategy that you can use, the gap up long strategy. We'll go over the key criteria of the setup, how to execute, and my live examples. This is a very simple technical strategy that's designed to take advantage and profit off of stocks that open up higher than the previous day's close, basically an overnight gap up, and you can find them very simply using a pre-market scanner. So there are 2 key criteria to this gap up long strategy. The first criterion is our short-term technical analysis on the daily chart, which we're going to go over right now. So we're looking at the stock Shopify over here, SHOP. Now let's go over to just the daily chart over here, enlarge it on our trading view chart. You can see on this particular day, the stock gapped up overnight from prior day's close of like what? $48 and gapped overnight to open at $54. That's a huge gap up. Now you're not looking for just any gap up. You want to see a gap up over the key daily resistance. So in this case, if you zoom out on the chart, you can see that there's some key resistance above the prior day's close, $58, around $50 here. $50 and over here $51, and the most extreme one, the peak over here, the little wicks on the daily chart, that's $54. So that's gonna be the most important level that you're gonna look at the next day during the pre-market planning session. And if you zoom out and delete the other line for a little bit, you can see we haven't tested that $54 ever since here, which is April of 2022. That's more than a year ago. So now we have the key level on the daily chart. Looking at the pre-market, you can see this stock was already consolidating above that level pre-market, $54. Now, a lot of times you're gonna have stocks that gap up to key resistance like this, and at the open, it just pops and fades and break down. So while yes, it's important to identify the key level, it doesn't mean you just buy it pre-market. Most of the time, despite seeing the stock breaking above key level during the pre-market session, I still prefer to wait for the open to execute my buys or sells. And we're gonna go over the exact buy and sell entry point for the strategy in just a little bit, but let's go over our second criterion for the strategy. So the second criterion is based on fundamental analysis. Essentially, you want to know if there is indeed a positive catalyst that's causing the stock to gap up so much overnight. And if we go over to my favorite stock news research tool, which is Benzinga Pro, you can type in Shopify over here, like I did here to select the ticker. Click on the calendar tab. You can see 2023 May 4th, which is the day of the gap up, they had earnings before the market opened. And let's scroll over to see the results of this earnings. You can see that the estimated was really bad for the stock. They were expected to lose money, but in actuality, they actually beat. They made money instead. This is the EPS. So you can see a surprise factor over here, over 125%. And same thing for the revenue as well. They had a nice beat also. So that's the reason the stock is gapping up, due to positive catalyst, which is earnings beat, and most likely also beat on guidance as well. Alright, so now that you know the most important two criteria to look out for, let's take a look at how you should execute on this strategy. So remember, the key level is $54 on the daily chart over here. Daily levels, that also matches with your pre-market support area. You can see the stock spiked to 56 pre-market, pull back to $54 area, and actually reclaim VWAP at the open and break through the new higher day. So there's two simple ways to execute the long side on this strategy. You can either long when the stock pulls down to key level $54 and give it 50 cents risk, which this one happened really quick, so nobody could have caught that. Maybe somebody did, but I didn't catch that. Or the second entry will be if the stock is able to break through the pre-market highs area around $56 like we just talked about. And essentially, you're using these two entry points as your guide to buy the dips along that key levels. So either $54 or over pre-market highs, all the little dips around the $56 are potential entries. And once the stock holds the key level, breaks through pre-market highs, $56, you can see it had a really, really strong breakout to almost $60. And that's why it's important to plan out your profit target as well and seeing the potential upside on this strategy. So this is where we want to zoom out on the daily charts like so and look at the range of the stock and the potential upside. So we talked about earlier, over $54, that's a very important key level, right? So over this area, where can the stock go to? If you zoom out, this thing really doesn't have any strong resistance until over here, closer to $58 here. and $60 range, 60, 61. And why is that? Because this is also a 52-week highs breakout, right? So you have multiple things. You have the daily breakout, you have weekly breakout through the key levels, and this is a new 52-week highs. And on top of all of those technical breakouts, you have earnings beat and guidance beat. If you've been following along in my YouTube videos, you know that earnings reports are some of my favorite catalysts because they essentially tell you short term whether the company is more bullish or bearish. And you, when you're trading a stock with technical analysis, fundamental analysis, all the criteria we just talked about, you're essentially riding a trend to the upside, following the big money. Anyways, that's the reason I like this strategy so much on large cap stocks is because when it's a multi-day, multi-week, even 52-week high breakout, you get a lot of upside. You can see this thing also ran for 1, 2, 3 days. So you can play the same setup for multiple days after. So anyways, all of these areas, $58, $60, are your price targets when you are trading this long on the first day. And even more so on the second day and the third day. You can see it went from, like the second day went from $57 to 60s and closing in at 62, next day at $64. But of course, we cannot just talk about entries and price targets. We also have to talk about risk management and how to get out and manage your risk and keep it very small in case the strategy doesn't work. Have you ever woken up broke or rich? This is what an overnight gap up or gap down would do to you. The results really depend on whether you use risk management. And guess what? I'm gonna choose rich every single time. So make sure to follow along to learn how to place a stop on this strategy. This strategy is actually very, very simple. If you think about it, if a stock is really breaking through 52-week highs, it should keep going and form a strong trend. So essentially, you want to stop out when the trend is no longer in your favor. And one of the best way to do so is with VWAP on the 5-minute chart. So you can see the stock is staying above 5 minutes, and if we're long above the $56, longing over to 58, 59, almost $60, there's no reason to get out until the stock is breaking down VWAP. So that's gonna be your risk. It's very simple. That's the only indicator I use. Once again, I use it for entries as well as for stopping out. Next, I'm gonna show you a live trading example on this gap up long strategy. You can see we're looking at the stock PANW. They also had the exact same catalyst as Shopify. They beat on earnings, guidance, and the stock gapped up overnight. If you look at a daily chart, you'll see the same thing. You can see on the chart, I've identified a key level of 179, 180s area. Stock is gapping up over to 185s. You can see I got long over the pre-market highs area of 183s. So everything we talked about. I got in have 1,000 shares at 184.90s. If we fast forward a little bit, you can see the stock is already around 187's mark. Now, I think I made a deadly mistake here of not selling into the breakout. If you can see on the daily chart, there's some resistance around that 187's area over here, that little wick over here. I did not see that. So zooming in, you can see the stock is pulling back. I'm still in my 1,000 shares at 184.90s. And you can see the stock is already kind of pulling back. Fast forward, it's testing 187s once again. I really should have sold at least like 50% of it, but I didn't. I'm up, a little bit more than $2,000. That's decent for this is what the first 5 minutes of the day, but I didn't sell. That's also the issue here. I think when planning out your daily resistance, like we did earlier on Shopify, you want to make sure you're selling into each resistance. So in this case, if I have 1,000 shares, what I should have done is sell at least 300 shares to scale out on my position. Fast forward a little bit more, you can see we're pulling back. I still haven't gotten out. Really should have gotten out some. On the 2-minute chart here, you can see I am finally starting to manage my position. So I went from being up $2,000 to now being up only $300. You can see I just added some around VWAP because 1,000 shares is now my full position, but still nonetheless it should have sold some. In hindsight, this is a pretty good ad. Remember we talked about using VWAP as your entry and as your risk. We're now back at 187. I really should have sold some up here after the ad, but no, I didn't. Really big range on these kind of large cap stocks, but that's why I love trading them. Wow, I can't believe I held it on for that long, 187s. With my average of 185, 1,500 shares. Really should have at least sold like 300 shares, but I didn't. Good practice on holding on to a winner, but at the same time, it's a fine balance between holding on to a winner and scaling out into your price targets. You can see, zooming in, we're having some trouble around that 188 area, the daily resistance we talked about. Okay, now I'm full size into the stock at 185.50s. I added a little bit on the dips, as if you saw earlier on the dips over here. Added just a couple more. Now my average is all the way up to 185.54. And when I'm full size, I want the stock to work almost, right away. I'm up $5,000 unrealized on the stock. So as long as you know this strategy works, I'm gonna tell you this became like a very small winner later because I didn't sell into the resistance levels I talked about. But, I'm happy about my entries and my patience, but I'm a little bit too patient in this case. Okay, so a lot has passed. You can see now I sold all my original position all the way here at 187 and like below VWAP on the stopping out around like 185's break even. So I went from being up over unrealized $5,000 to now realizing only $300. So, my mistake here is I didn't sell into those resistance areas, which you definitely should be doing. And I re-entered, but now this is like a little bounce thing that I'm gonna do. But again, I realized the day green, but not as green as I should have been if had I sold into the breakouts. Technical analysis is a practical skill that you can only sharpen by practicing over and over again. If you're just starting out, I recommend you to find a trading tool that gives you free access to customizable charts and drawing tools. With Moomoo, you can practice technical analysis with the advanced charting tools that are verified by the US Patent and Trademark Office for their customizable and easy-to-use interface. You can make use of over 37 drawing tools and 63 technical indicators, such as my favorite VWAP indicator for my intraday charts, the volume moving average, and the Fibonacci retracement tool that I use to identify potential gap up reversal levels. Another really valuable feature that you can get on Moomoo is the free real-time market data. This is the only zero commission trading app that gives you real-time level 2 quotes, short volumes, and earnings news for free. More exciting news for my fellow Canadians, Moomoo is now available in Canada, and they offer exclusive sign-up rewards for all Humble Trader viewers if you use my link in the description. If you're in the US, you can get up to 16 free stocks as well using my link. Thanks to Moomoo for sponsoring this video. Chapter 3, Gap Down Short Strategy, Criteria and Live Examples. So far so good? In our next chapter, we're gonna be looking at the exact opposite of the previous setup, which I call the Gap Down Short Strategy. And remember, if you're enjoying this kind of crash course so far, please comment gap trading down below and also give me a gentle tap on the like button. I'd really appreciate it. It really doesn't matter whether stocks are gapping up or down, left or right. As long as there's volume and range, there's still strategies that will allow you to profit on each side. Now, the next short selling strategy is available to traders whose brokers can let them short a lot of these easy to borrow stocks. So that should be almost everyone, besides the users on Thinkorswim. Just like a previous strategy, there's a few key criteria to note for you to trade this gap down short strategy. Okay, now on the screen over here, you're looking at the stock PayPal. You can see this thing gapped down huge overnight after, once again, earnings report. You can see on this particular day over here, with a huge gap down overnight, prior day's close was like $76. And this thing gapped down after hours, after really bad earnings report, And the next day, pre-market, this thing's trading at like $70. So pre-market already dropped $6 per share on a $76 stock. And you can see at the open, this thing just continued tanking even lower, all the way down to like $68 and $66. So the first key criterion is once again technical analysis. So which is opposite to what you saw with Shopify, the gap up long strategy. On this gap down short, you want to see it break down some key support on the daily chart. So in this case, if we go on the daily chart over here, you can see the 52-week lows is around the $66 area, right? So this is almost the exact opposite of Shopify. Shopify broke through 52-week highs. This one broke down 52-week lows. But also you can see like some small little support here in which, this thing broke tons of different support areas. And over here, some small ones, $69, over here, $67. This thing was just really weak. You can see pre-market, this thing broke down at 71's daily support that we drew. Pre-market already broke down. And at the open, it didn't even spike. It just like dumped through the $69. And then later on the $68. And that's when it's like started trying to bounce. But no bueno. It went even lower to $66. So that's where you have both of these criteria met. Really, really bearish fundamental analysis with the earnings report and guidance, as well as breakdown on the technicals on the daily chart. And this short strategy execution is very simple. Remember, this is basically the exact opposite of the previous strategy. You want to short using VWAP as your risk on every little small bounces to test these key areas. So, I don't think anyone would have caught this. It dropped really quick. SSR also triggered, so it's impossible to chase the short. And then you want to enter on these little bounces towards VWAP and towards our key daily levels, which is $68 with a downside move to 67, 66. And honestly, once it broke down that $66, the 52-week lows, there's really no bottom in sight for the stock, right? Because if you want to see more support, you have to go all the way to prior to 2020 for PayPal stock. But essentially, if you've got a short entry on these little pops, using VWAP as your risk, and these little pops breaking down key support, you're looking to join the trend to the downside until the stock have found a meaningful consolidation, which it really didn't do until like 1, 2, 3 day on the third day. Okay, now we're gonna dive into a live trading example on this gap down short strategy, which is opposite of the long that we just saw earlier with PenW. In this example, we're gonna use my favorite stock ever, Moderna stock. I've had some love-hate relationship with this stock, mostly hate. But this is also the stock where I lost the most amount of money on a single trade in one day. It's not fun. Anyways, so you can see Moderna stock also gapped down from prior days close due to this really negative catalyst. And you can see over here on the daily chart, I know it's really small, on the left-hand side here, the stock broke down that 147's daily support. And, and while I didn't catch it at 155, I caught the little bounce at 147's. And I only have 500 shares at the time. Looking for a simple, easy trade, like a scalp to the downside. You can see the stock, I got in 500 shares around 147's, on that little bounce to 147.50's. Again, my risk will be VWAP reclaim at this point, which is, if you see VWAP over here, 148. So my risk is essentially 50 cents to 60 cents, depending on the slippage. And now you can see it's already dropping down 144, so I'm in the money $3 per share. Remember, you want the fundamentals, the catalyst to align that's bearish, as well as the daily chart to be breaking down. So fast forward, we're on the chart on top. We're holding at 145s. I think it has downside to a lot lower to like 140s. Why do I know that? Because I tried to long Moderna stock before and it just wouldn't bounce. So I learned from my mistakes. You can see it's really weak. That little bounce you saw earlier to 145 didn't do anything. You can see it's back at the lower day, 144. Okay, so fast forward on the chart on Moderna here. I was getting really bored on the stock, and I was trying to focus on a couple other stocks I'm watching. You can see down below. So I'm trying to cover just a little bit, around 200 shares on Moderna, around 144.80s. So just in case, when I'm paying attention to something else, I've already taken some profit just in case. So you can see trying to cover some 144. If you look at the daily chart, there's no real support here. Yeah, that small resistance here at 144s, but I really thought it was gonna fade lower. Fast forward, you can see I only have 300 shares left at the same 147 average. I covered partial down here earlier, 200 shares, and trying to see if it's gonna fade even lower. And I just found out I closed my Moderna trade around this time at 145 over here. I'm closing it out over here, I think, because I think I ran out of patience. I just got filled down here. You can see I realized my Moderna trade on the short side, $800.
Chapter 4. Variations of gap trading strategies. You have just learned 2 trading strategies that you can use to plan your trades when you spot a stock that gapped up or gapped down for a long or a short. I would highly recommend beginner traders to practice the first 2 setups on your paper trading account and familiarize yourself with the gap trading executions. And for some of you who are looking for more advanced strategies, I have a couple more variations for you to trade these overnight gappers. These strategies are called the gap up short selling strategy, the gap down scalping strategy, and pre-market gap up short strategy. Strategies. It's a lot of strategies, I know. For short-term traders like you and I, we always want to be very versatile and adaptable to the current market conditions. In the last few years, we've experienced a crazy bull market rally in 2020 and 21, and we also got hit with a bearish economy due to inflation and global conflicts in 22 and 23. And that's why you need to be able to profit from opportunities on the long side and the short side with these overnight gappers. The fundamental concept and trading psychology behind the next 3 strategy variations are very similar as the previous gap trading strategies you just learned. However, they're different in terms of the execution and entry timing. For each of these more advanced strategies, I'll show you the trade planning process, risk management, live technical analysis, and price action. Make sure to ask me any questions you may have down below, and I'll do my best to answer you. Now, let's dive into our third gap trading strategy, the gap up short selling setup. Chapter 5, Gap Up Short Selling Strategy. So the first trade I want to share with you guys is CVNA Carvana Gap Up Short Selling Strategy. This is a pretty simple trading setup for day traders and scalpers who are looking to trade just the opening hours. And as you'll see later in the live trading recording that I have, I made a little over $1,100 on this ticker on the short side within about 20-30 minutes after the open. So let's take a look on this particular day on Carvana over here. This day we're talking about, as you can see, the stock gapped up huge overnight from prior day's close to about $8 all the way to pre-market highs of 1070s and hit like a little peak, lower highs 1020s pre-market, and since then at the open just sold off. So we're looking for that little gap up to short into in this particular stock. And as you probably know already, Carvana is also considered one of the many meme stocks that ran in 2021 and 2022. And the thing with meme stock is that every time, as you can see on the daily chart, usually these stocks, whether it's AMC, BBBY, it's been long-term downtrending. I mean, CVNA used to be a $300 stock, and since then it's drifted off and sold off all the way to like $4. And then you can see, has a lot of failed spikes in the past before. And every time it gaps up, especially to a key daily resistance, which it did on this particular day we're looking at, it gapped up to like 10, 40, resistance, sold off. And over here, this rough area, 980s, that's also the daily resistance. So whenever we have these meme stocks with like a long-term backholder chart that you just saw, gapping up to key daily resistance, then a lot of times I'm more short bias on the stock. And it'll work really well for a simple scalping strategy on the short side. So you can see this is pre-market level, 980s over here. This little pre-market support. That's what I'm going to look for when the stock breaks down, and that's my trigger for entry. And if this is the entry on the short side, then I'm risking about here, pre-market highs area, 1030s. So we're talking about 40, 50 cents of risk. And for the downside, you can see on the downside I have all these lines. But downside, obviously, at the time, we don't know where the stock is gonna go. But if we're looking at a daily chart, the downside, I wanna look for the next level support down on the daily chart. So you have a small support around 930s. Over here, 930, 950s right here. And then you have a little bit more support down here around 860s range. So those will be your price targets. So if that's the entry, downside you have here, 40 cents. So that'll be 1-to-1 risk reward. But if you're looking for even more, then you have downside to like 860s. Or like, there's probably a small level around 880s mark. So here are the 3 key criteria for this scalping short strategy. Number 1, it needs to have a past price action on the daily chart of a long-term downtrending chart. Number 2, you need to see a pre-market gap up. And number 3, this needs to be a stock that's gapping up on air, basically gapping up on nothing. So you can see it's 9:31 a.m. right here. So market just opened about 1 minute in. This Carvana trade, you can see I'm already in 1,000 shares. So it happened super fast after the open. You can see the breakdown of this level right here that we talked about pre-market, which is the 980s area. It's already broken down. So that's why I really hurried up and got in 1,000 shares on the short side. Thankfully, Carvana is an easy to borrow stock. So it didn't cost me anything to locate those stocks short. And as you can see, immediately after the open, it got halted to the downside. So I'm stuck short with 1,000 shares, which is a starter for me. The idea is to keep on adding into it after it confirmed the breakdown of 980s pre-market support. These volatility holds happen whenever a stock increases or decreases by 10% within a 5-minute time period. Okay, I fast forwarded a little bit, it's on hold. Really quick, you can see unhalted. You can see it halted down, right? It halted at about 980. It opened at 950. So you have about 30 cents air gap. So this is usually what happens after the unhold. You can see on the top over here, GME, even though I'm not trading it, that's also a lot of meme stocks were gapping up in sympathy. You can see this thing is also holding to the downside as well, but I wasn't trading GME, GameStop. So you can see Carvana, usually after the hold, whenever you have a gap down, you're gonna get a pop to retest that VWAP area, and that's kind of what I'm looking for, a bounce to short into. And a critical mistake that a lot of new traders make is that they don't look for the little bounce to short, and they'll hit the bid at the very bottom at like 940 or 950 down there. So for me, I want to start adding slowly into the little bounces. You can see I added a little bit, 1,000 shares at around 960s. So that gave me an average of 970 right now on 2,000 shares. You can see that little test of VWAP right now, I'm down about 3 cents, no problem. So I'm looking at whether we're gonna reclaim that VWAP, in which in this case, the risk is now moved down. So I'm no longer risking the 1030 like we talked about earlier. Since I started adding into it, I'm moving my risk down. I'm moving it to around VWAP area. So that will be around 980s. So at this point, I'm risking about 10 cents, 10-50 cents with slippage in mind. So you can see you had a little pop to test that VWAP area. That's what the yellow line that you see on screen right now. You can see the stock is staying pretty heavy. That little pop barely even try to reclaim that VWAP area. So really, really weak. You have some decent volume on Carvana. You're trading 7.4 million. So still holding my 2,000 shares short. So at any given point, I'm usually trading at least 2 stocks at the same time. But on the top over here, you can see 2-minute chart on Carvana. You tested at 980s area, right? I was saying like if it reclaimed that VWAP, I'm gonna have to stop out. But it looks like you're failing that VWAP, at least right now. We're back down to 970s, that's my average. I'm still holding. I think the idea is that I wanna add at least a couple more times. You can see I'm adding the confirmation of weakness, added about only 200 shares. I was trying to add 500 shares, but not sure why I canceled it. So I only got filled 200 shares. at this is what 970s, and you can see because I'm adding on the confirmation of a breakdown. I'm not adding on strength, so that's the difference here. I'm adding once the stock rejects that 980s level we talked about and rejecting VWAP. And as you can see on the top window here, Carvana is staying weak. We're back down to 950s. So I'm up about 20 cents per share. But I think at the minimum, I was looking for $9. Remember, at this point, I'm risking 15 cents around that. For downside, if we hold it down all the way down to $9, then I can potentially make about 70 cents. So that's good risk reward. You can see we're testing the lower day, which is 940s. There's a really, really small support here from pre-market 940s. So I'm expecting some small bounce, maybe like a dead cat bounce. So I think I'm gonna start covering at least like a very, very small piece into that. And that will give me about 30 cents per share if I cover it there. So you can see I'm just covering small, 200 shares.
No, I didn't cover it.
So fast forward a little bit, you can see, oh, I actually did not cover. I actually added even more, 940s. Yeah, because the stock was so weak. You can see even on that trying to add, I was trying to get filled 500 shares, couldn't get filled. I only got filled about 100 shares. So I'm adding to a downside on the breakdown of that 940s area. Because the stock was extremely weak, as shown on the tape. So you can see the stock can barely even bounce. I'm trying to not to like chase the weakness, to short into the weakness, but so I'm trying to wait for the bounce. But sometimes you just gotta accept the stock is so weak that it won't bounce. So that's why I only have about 2,300 shares short, now with an average about 968. So back to Carvana, you can see now we are dripping lower. The stock is all the way down to 920s. Really, really weak, right? There's barely any bounce. And I finally covered some. I covered about 500 shares, I believe. Yeah, 500 shares. So I'm down to 1,800 shares on the short side from 2,300. So I covered some, locked in about $200. But I want to see how much longer I can hold on to the remainder of 1,800 shares short. And keep in mind, if you look at the bottom right-hand corner, the little clock over here, market clock, it's only 9:44. So it's only 15 minutes after market's opened. But all of this planning, once again, is done pre-market. You can see here the stock is extremely weak. You can barely get any uptick. The bids are just getting hammered down. There's no one buying the stock. And this is very typical of the meme stocks and any stocks that have a long-term bag holder chart that you saw earlier. So this is the reason that having a bag holder chart is one of the most important key criteria for this scalping short strategy. Whether you're actually scalping for the quick move or trying to hold on to at least 20, 30 minutes like I did, doesn't matter. It's important to look at a daily chart. So we're back down to 915. I think you're gonna see me trying to cover up the rest of the position, even though I should have held on to a lot longer. You can see I'm trying to cover some at 916 over here. The lows of the day at the time was I think I printed 909 earlier. I covered all of it. Oh wow, I covered all of it. So I covered all of it at 916, locking in $1,100. So coming back to the trading view charts now, we're now looking at 2 minutes. I believe that was the time frame I was using to execute. You can see I entered here 980s, which you saw earlier, and I covered pretty much everything around 915 here. And you can see the stock ended up going a little bit lower. Okay, not all the way to 860. That made me feel a little better. But to 890, 880. So I left about, somebody do a math, 30 cents on the table, which is okay. But we're trying to capture the meat of the move from the open, failing that key daily and pre-market support, going short, risking the pre-market highs, 30 cents, looking for a downside move all the way to 915 or 890s.
Chapter 6, Gap Down Long Strategy.
This time around, I'm going to demonstrate another live trading example on Tesla, your favorite stock. So in contrast to a Carvana trade on the short side, we're not looking at a large cap stock that's gapping down during pre-market. So as you can see over here on this day, the day before, Tesla had a really strong day. We're talking about a move from 197 all the way to 207. So that's a really strong close. Over here, the white area is the regular trading hours, and the yellow part on trading view, this is the extended hours trading. So you can see the next day, this thing actually gapped all the way down from 207s down to 202s, and then pre-market went to a low of $200. We're talking about a 7-point gap down overnight. So we're about to dive into the key criteria for the scalping strategy once again. I hope you guys have been taking notes and learning from the essence of these live trades. Before we move on to talk about the criteria and the details of the strategy, if you haven't done so already, please remember to drop a like at the bottom of the video. And remember to subscribe if you want to see more videos like these in the future. Thank you very much. Now let's move on to the next strategy. So here are the 4 key criteria on the long scalping strategy on Tesla stock. So number 1, it needs to be a large cap stock. This strategy does not work for small caps or micro floats or any of those like runners. Like it just doesn't work. It works best for large cap stocks like Tesla, Nvidia, Apple, AMD. Number 2, the stock needs to have really strong breakout the previous day. So that's why I pointed out the daily chart for Tesla stock earlier. As you can see on the daily chart, right, this day, this is the previous day, you had a huge breakout. Right? So that's why the second day, the gap down, it gives you a good opportunity to bounce the stock. We're not looking for a big move. Once again, we're looking for a simple bounce strategy that you can trade for 15, 30 minutes and be done and go to work or do whatever else you want. The third criteria is that you need a pre-market gap down, which is pretty obvious. Once again, you had a gap down move from 207 prior day's close to $200 pre-market. So that's what we call a gap down. And last but not least, the stock needs to be gapping down on really high volume. On this particular day, I don't have my scanner up, but Tesla, whenever it gaps up or gaps down, it trades really high volume, over 1 million shares pre-market. So that's what you want to see. If the stock was gapping down on like 20,000 shares, not good enough. Remember, you're not here to be Warren Buffett and invest in the stock, okay? We're talking about trading here. All we're looking for is to profit from a short-term price action. Hit it and leave it. Quote me in the comment section if you agree. Now let's plan for our entries on the long side, the profit target, as well as the risk now. So on Tesla stock, you always want to start from the daily chart because it's a stock that has a big range. So that's why I have $200 here. You can see on the daily chart, that's a key level right here. The stock previously tested once, twice over here, and 3 times that held up a support on this area in February. So that's why $200 is going to be key. But remember, the stock is not, you should not just use one single entry point. It needs to be a zone, right? So that's why you look at the previous breakout day, the day before. If you look at it, before it hit $200, it consolidated right here. Broke out to highs, 199s, consolidated, dipped a little bit to that 199.10s area. And then that's when it like dipped, trapped, and then broke out to new highs. So that's the reason this is going to be an important level that also lines up on the daily chart. This zone here, we're just going to call it 199. This zone on the daily chart is going to be the key level you're looking for entries on bouncing the stock on this overnight gap down. So this is my entry area, 199, 200, right? I know this is a big range, but again, Tesla, big range stock. You need to give it at least $1 room. So if you're planning to long 200s, you need to be able to risk 199 and below, right? And if you're long 199s, then you probably can have your risk be a little bit tighter at 50 cents, 70s or 198.50s. Now for the upside, I will say I was a little bit more aggressive. You're gonna see in the live trading recording later that I had originally aimed for 204s on the bounce. So I was looking for 4-point bounce on the upside. That's very possible with a stock like Tesla. However, you can see you have another small level here around 203s. 203s, 202s, 204s. Those are the price targets that I'm aiming for. Remember, we're talking about a quick scalp. So the best you're gonna get is 1 to 2 risk reward. And if it really does go to 204s, then that's probably, if you do the math, that's 1 to 3, 1 to 4 risk reward. On this particular day, on the gap down to $200, I got in a starter at, I think about 200 shares starter at, this is like what, 199.80s, and then added after reclaim of $200 because we talked about this. $200, that's gonna be a key level, and this is only a minute after the market open, so it happened really, really quick, right? Remember, if you're trading this for a scalp for $1, $2, you gotta be in and out, hit it and leave it. So that's why things happen really fast. If you don't have a fast broker platform like this one, which is Dash Trader Pro, you might not be able to execute this. Okay, so at the open, you can see I got in $200, so 200 entry, 200, this is like what, 230s maybe? So I had 1,000 shares averaging $200.30. You can see the stock is already bouncing. We bounced about 1 point now, testing VWAP. Now, if I was more aggressive, you can see down here, 230, that's my average. Now, if I was more aggressive, I actually add over this bounce, but I don't think I was as aggressive as I should be because I want to be patient, looking for the big move towards that 204s area, which is your pre-market highs on the day. You can see, we tested a VWAP, rejected a little bit, similar to Carvana earlier, but I'm still holding. Do not panic. At a decent average, about $200.30. At this point, I would be risking just below $200. So that'll be 40 cents risk. So I can potentially lose $400 on this trade. Let's see. We're testing that 201s. You can see I'm getting ready to add, trying to add into Tesla. I want to add slowly, 300 shares, because after all, it's a really volatile stock. But we actually remain strong. You can see we're testing over 201s once again and testing that VWAP. And usually, same idea as on the short side. On the short, I want to short once the stock is below VWAP. If the stock is over VWAP, I want to add into it on the long side. You can see I wasn't certain, so I sold a little bit too fast. I sold 300 shares at 201s-ish. So I locked in about a little bit over $200, not a lot. But I want to see if the stock stays strong, then I'll add back into it. Or to sell into the pop towards that 202, 204s area. I definitely was playing a little bit safe on this particular day though. Because I believe at the time market was kind of choppy. So I wasn't quite sure if I should stick with it or just get out. You can see I went red for a little bit and when it went back down to my average, but nothing to be too concerned about right now. And I'm trading on the 5-minute chart for a stock like Tesla. This is very different than Carvana because Tesla is a big cap, big range. You can see that popped way too quick. Over 201.88. So I'm up about, decent. So I'm trying to sell just a little bit to lock it in, 201.80s. But once again, I am aiming for that 204s. If we don't get it, that's fine, but I want to make sure I'm locking in profit along the way. And that's a little bit over $1 move. So risking 30 cents to make $1, that's decent risk reward. I know it didn't go according to plan where I sold everything at 204s, but you just gotta be cautious. Remember, hit it and leave it. There were a couple of things I'm concerned about looking at the market, and now I'm switching on the 2-minute time frame just to look at the price action a little bit closer to determine whether this is just a little pullback or are we actually in like a huge downtrend retest and we're failing that. And I believe I'm gonna get out of the position really quick. 202s now. I think I just exited everything at 202. The remainder 500 shares and locking in about $1,400. And you can see back on the trading view charts, that was a good call to sell everything around 202s. You can see I entered here $200, right? Even after the ad, my average about 230 points. and I sold everything around 202. I didn't get the top of 202.70s, but I got out around this area as you saw earlier, even though my ultimate price target was 204s. But it ends up being a good sell because after that, this thing just rejected and then stayed below VWAP on the 5-minute chart over here and really just sold off all the way down to 192. So I'm really glad I didn't hold on for that, $2 more. And that's why I keep on repeating, hit it and leave it. Do not outstay your welcome. If you're looking to do these kind of scalping strategy, whether it's on the long side like Tesla or short like Carvana.
Chapter 7, Pre-Market Gap Up Short Strategy. Congrats on making it to the final chapter of this gap trading crash course. I'm sharing a bonus trading strategy for those of you who are looking for more setups in your bag. I call it the Pre-Market Gap Up Short Strategy. I get a lot of questions from you guys asking if I trade pre-market. I'm gonna answer that in just a little bit, but let me know. I'm kind of curious to see how many people watching this are trying to trade pre-market or want to learn pre-market trading strategies. Do you trade during pre-market hours? The answer to this question is yes, sometimes. Very, very selective times. I will enter a trade if I see a pre-market mover, but it must fulfill my setup criteria. And that goes to the next strategy we're going to talk about. I must give you a disclaimer. The next strategy is what I consider really risky, but at the same time, you can make a lot of money. So in this particular trade, I made almost $10,000. So the stock we're looking at is FCNCA. I know, long ticker. First Citizens Bank. Now they're known for the bank who bought up Silicon Valley Bank's debt. And that's the reason the stock gapped up from like $600, like below $600 prior to its close, all the way to $900. So we're talking about a $300 gap up overnight. And that's the reason, once again, I just gotta disclaim this. This is a very risky strategy. And if you're watching this, make sure you have risk management intact. So this particular strategy is pretty similar to what you saw for Carvana earlier. So if you paid attention earlier, you remember the key criteria. First of all, you want to see a downtrending daily chart. In this case, you can see downtrending daily chart. I mean, this thing was part of the banking crisis that started with Silicon Valley Bank. You can see the stock sold off from $800 all the way down to $500. And you can see a huge pre-market gap up as usual. Now, most importantly, you want to note that ideally, to trade this particular setup, like we talked about for Carvana, you don't want any meaningful news for the stock. However, on this particular day, yes, you have the huge gap up. Yes, you have a downtrending daily chart. But guess what? You have extremely positive news and, huge news headline. They're going to buy Silicon Valley Bank's debt. And that's what I mean by it's a very risky strategy. Because whenever you're shorting these stocks that have news, you need to know when that's it. Like you cannot hold on to the fade all the way down to $700. No, I'd be dreaming. You gotta be able to just get out at the consolidation before this reversal. Okay? So I'm gonna show you how I did that later on. So here's the recording. You can see pre-market, I already had a short scalp from 915 down to this is like what? 880. And I only had 100 shares. I mean, do the math. I only had 100 shares. So this is the kind of range you get. We're talking about like a $20 range. So you don't want to like oversize for these things. There's a couple of important lessons here. Besides what we just talked about, that the stock has catalysts, so you want to be able to just get in and get out and like do not outstay your welcome. The second thing is that if you were trading pre-market, which I was, now the market's open, but I was from the shorts 915 down to 880, we're talking about like a 30-point drop actually. The volume is going to be very, very low on the stock. So you don't want to oversize. Like using 1,000 shares at one time won't work unless you're building it slowly. 200 shares here, 200, 300. You have to slowly build it up. This market is already open.
and it's only trading 280,000 shares. So that's what I mean by this is extremely risky. Okay, just because you're watching this doesn't mean this is the right trade for you. Okay, I'm telling you this just so you don't burn yourself. If you do decide to trade the strategy, size down, and make sure you maybe start with paper trading first. So that was the pre-market trade. A very simple higher day shorts 9.15 risking 9.40s. We're talking about a $20, $30 risk per share, and then downside to covering into the open. I just didn't want to hold it into the open, so that's why I just covered everything here at 8.80s. And now, once the market's open, I'm stocking for my next short entries here. But if all you do is trade pre-market, this strategy will work quite well. Maybe on some different stocks that have more volume and less spreads and doesn't have such a positive news. So at the open, you can see this thing just sold off from opening of 870, went all the way down to 850. So that's another 20 points from where I covered. Volume is staying low, but you can see I'm trying to fill 500 shares short at 848. So I got some, only 200 shares, gotta be careful. Once again, volume is really low. We're only trading 280,000 shares. But whenever I get partial fills, I depend. Oh, I got full fill at 848. Otherwise, I would cancel it, okay? But you can see, this thing, the spread, we're talking about $3 spread. So that's another reason you want to size down, okay? But for me, 500 shares on this, it's manageable. So I'm realized red, 3,000, but if you look at the spread, I'm an average is 848. I'm in between the spread. The bid is 846 and the ask is 850. So that's why, these higher spread stocks, you gotta be able to have the heart for it, okay? But for me, this was okay. And I don't really have any plans on adding into anymore. I think 500 shares on this stock with such a big range, we're talking about $20, $30. That's all I wanted, okay? So I'm looking for the first line, which is that 830s area, I believe. That's gonna be my first price target because that's the daily level here on the daily chart. So that's what I'm looking for. You can see the stock is trying to hold up at 830s area. So I'm watching this to see if we keep on getting a lot of bids around this area, then I'm gonna cover everything for either a small win or a small loss. So fast forward a little bit here, you can see the stock is still consolidating around that VWAP area. On a stock like this, I definitely use a 5-minute chart. And once again, I'm looking for that breakdown to 830s. That's all I'm looking for. I'm up about $6 per share. But once again, it's deceiving because of the spreads. But I'm looking for a drop and I'm going to cover and get out. But I believe I ended up breaking some rules here and outstayed for way too long. But I really wish I covered some into this 835s. That's gonna be the lower day and it's testing that pre-market support area. I really wish I covered into this. But you're gonna see I made some mistake here. Even right now it's printing 834. 834, 831, that's the bids. And I'm up a decent amount, but I still didn't cover. I really wish I had because you're gonna see I get trapped later on. So I really should have just covered everything. I really wish I did, but I didn't. If I just cover everything into 832s, that'll already be a 10 grand day and I'll be done. But no, I definitely outside. You can see I'm trying to cover 200 shares at 830, but I'm not gonna get it because it's holding that 830 support really, really well. And the spreads on this is just nasty. So that's the reason I said and mentioned earlier, this is a risky trade because of the volume and the spreads and the fact that it has positive news. Nope, you can see right away we pop back up. This is what happens when you're trading low volume stocks. I don't even have that many share sizes, 500 shares. That's enough of a fluctuation between when you saw earlier 5 grand and now negative $500. You can see on this little pullback here, I finally covered some. So I covered 200 shares at 841, I think, or 840. I'm glad I covered some. I was like nervous, not gonna lie. So at this given point, the worst that can happen is break even. If we skip up through VWAP and I'll get stopped out, and I'll probably give back everything. But at least I wouldn't lose a lot of money. So this is what we call like adjusting your risk as the trade goes on. And of course, according to price action as well. So fast forward here, almost 10 o'clock, the volume really dropped a lot. So you can see that's why I'm trying to cover now. So the stock was already low volume to begin with. But whenever you see on 2-minute or 5-minute charts, this thing, the volume, you can see down here, drops below 10K. That's when you definitely want to consider just getting out. So that's what I'm trying to do. Trying to get out in small pieces. 100 shares here, 100 shares there. I want to get out before the huge squeeze. Not saying all the low volume traded stocks will squeeze. I'm not saying that. But then it becomes a 50-50 event at this point. And I don't want to sit through low volume consolidation. If the consolidation was higher volume, I would be okay sitting through that because you can read into the price action a lot better. When there's no volume, and the price just kind of teeters around the support area that looks like it's gonna break down, but it just won't. And there's always like an underlying bid around 830s, 831s. You want to be cautious, especially if you're short. So that's why I want to get out. So you can see I finally got out at 832 area. I covered another 100 shares. Now I have the remainder 200 shares. Even like rewatching this recording is like making me nervous. I'm like, just get out, please, just get out. Yeah, because the bid's dropping a little bit more. 826. I think. 826.50, wow. Risky, once again, risky trade. Don't do it if you're a beginner. Just paper trade this, okay, on small size. See if you can actually sit through the consolidation on small sizes. Even just 10 shares, this will be like a difference of like a couple $100 on each skip, right? Oh, I got filled another 100 shares, so locked in $8,000 at 827. Now I just have the remainder 100 shares. I want to see where it goes, I guess. Oh, no, I'm trying to get out. Yeah, I think it was a good idea to just try to get out. 827 was the lowest point that I got on this. You can see it's starting to like bounce a little bit back to like 830s, back to that previous support area. You can see on the 5-minute chart, on the 5-minute, that's why I keep on switching between 2-minute and 5-minute. On the 5-minute, volume is starting to come in as a bigger picture, right? And then, you're back at 835, so no, I want to get out. They're filling a lot of shares down there at 835, 834. Earlier, the print, 827, the volume was so low. So at this point, I think I just want to get out. On the 5-minute chart, it looks like it's consolidated. Okay, I got out everything at 836, I believe. So locked in $9,400. So this is really a 1-to-1 risk reward. So it's not the best trade. So that's why it is also risky. But you can see if you are cautious, like I was, talking to through the consolidation stage while I covered everything, instead of waiting for another drop to 800, then, if you're able to hit it and leave it, like we just keep on saying throughout this video, you can still make some decent profit. And I closed all the trades by 10 o'clock. So I got out here 10 o'clock. So this is a 30-minute trade to make, we talked about $9,400. So here are the key takeaways from this strategy in this lesson. A very, very risky trade. Once again, pre-market short and also an overnight gap up, scalping on the short side on this strategy. Number 1, you must be very cautious if you are shorting pre-market on a very low volume stock, such as this one. You must size down, look for the spread, see if you can even handle that. If not, size down 1/10 of your regular share sizes. Number 2, be cautious if there is actually positive news for the stock. I mean, we're talking about a $300 overnight gap up. There was news. So if you're shorting this, be cautious. If you're long, right? Then that's probably a good time to look for reversal on this. Not saying to long the huge gap up, but you want to wait for the reversal midday. And last but not least, once again, as we keep on repeating throughout the video, hit it and leave it, okay? Don't outstay your welcome. You need to watch when the price action changes, especially during the low volume consolidation time you saw, and just cover everything up. You are not gonna make, the most money you could, but you need to be able to get out and protect your profit or break even stop on the name. Congratulations on completing our second technical analysis crash course. I hope you have learned at least 1 or 2 trading setups that you can start using tomorrow. You can save this video if you find the strategies helpful, and remember to share it with your trading partners. If you want to see more trading crash course videos for free, then check out this playlist over here, especially the one on price action trading. Thank you guys for watching as always. I'm the Humble Trader, and I'll see you guys next time.